Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, August 10th, 2020. It is 2:47 Eastern Time as I'm starting the video, so we have just about a little over an hour to go before trading day closes out here. What I wanted to do in the video is a quick update on the things I've been watching lately. So we're going to do a very, very brief update on the broad market since I already posted an update with some screenshots earlier today. We'll look at NQES, major indexes, and we'll quick update on gold and silver. The mining stocks as well, GDX and SIL. We'll just look at the mining stock ETFs right now. And then finally, I want to do do another update on the agricultural commodities and more importantly, the ag input stocks. Those are the ones I've been watching lately. A lot of those charts were bullish set up. Quite a few have popped since my last update. So let's just dive into the charts here. The bigger picture here, let's start out with, let's go to silver first. Silver and gold, same story. This is a weekly chart. Both are at long-term resistance. Here we go. Let's just show you here. We have this long-term resistance zone right here, about 26 or so, give or take, and that is defined by all these reactions back here, and then that big old gap right there. So still what I believe to be what I refer to as a momentum-fueled overshoot. We have a lot of velocity going into a move into a resistance level like this, almost a vertical run up, very powerful, and you tend to overshoot the actual resistance level that you're going to stop on or have that reaction on. And so you can see, again, covered it all in detail last week. Oversold, extreme oversold readings, not just oversold. Again, the red line down here, 70, is typically considered oversold, and it is, but when you get to these extreme levels, as you can see in the past, the risk reward is just not favorable. So I think one of the best things to watch right now as far as trading opportunities go, swing trading, are the precious metals and the mining stocks for pullback trades. And being that we're at resistance, a case can be made that you can start scaling in now, or if you're a very aggressive trader, you could take a full short position and just manage your stops appropriately. And as always, stops should be commensurate with how far you're swinging for your target. If you're looking for a very quick pullback trade, you're going to obviously have a smaller price target and a lower stop. If you're, let's say you're looking for a move all the way back here, that 2072 level, which would be, that's certainly a possibility. That's a drop of about 25%. Then you could allow a considerably wider stop, 7-8%, somewhere along those lines maybe. All right, next up, gold, same story, nothing new to update. Since last week, gold also at major long-term resistance, which is that top of the last bull market there in 2011. Reaction highs like that are just always picked up on traders' radars. And again, same story, yes, a little bit above it, but not much. And again, on what I believe to be a momentum-fueled overshoot, extreme overbought conditions, etc., etc., etc. Best bang for your buck, I think, will come when we get the next pullback, whether it comes now, very soon, as in the next few days to few weeks, or if it comes a little bit later. Well, we'll see what happens. If it comes a little bit later, maybe we consolidate in time first, maybe we continue. Anything's possible, but again, to me, the risk reward, despite the current trend, the risk reward is skewed to the downside. It is no longer, at this point, in my opinion, favorable to being long. Sometimes you get some crazy run that justifies overbought, or you stay overbought for a very long period of time. That is certainly a possibility, and if that's what you think may happen, nothing wrong with setting a trailing stop, a little below, and let your position run and keep raising those stop along the way. And at some point, the pullback will come and you'll get stopped out. So that allows your winners to ride if you do that. All right, so that's GDX again. A beautiful daily chart. You have a nice clean up trend line, well defined, and we're just sitting on it right now, very precariously rested on that trend line. Almost divergence down, basically equal highs, slightly higher high on the RSI, but clear negative divergence there on the PPO down here, meaning it's making lower highs and wedging up. So there's your nice, clean, what we call bearish rising wedge pattern, very well-defined trend line. Well-defined because there's a lot of reactions on it there, especially from this point here. and a minimum target zone down here, and a quite likely longer term swing target zone down around 31.33, which would represent a drop in the gold mining stocks of about 26%. And then of course you have silver, the silver miners ETF, where I think you get a little more bang for your buck should that correction come soon. And we're talking a swing trade at least down to that 37.67ish level. That's about 24%, and quite likely down here that would be my comparable target that I just gave you on GDX, although that's about a 32% drop, and I'm focusing on these reaction highs back here. So a lot of meat on the bone there, and this one's still well above trend, but you have some little, now you have some small divergences here on the this daily chart as well. And loop over to the equity markets. Again, posted an update this morning on NQ. You know, the NQ 60-minute chart, this trend line goes to the left there, but this is your primary trend line. It goes back a ways. Here, let me do something here. There it is. I zoomed out on the time frame so you could see it coming off this low right here. So again, primary trend line there, pulse a breakdown, and we back tested it again. So we're below trend. 1, 2 back tests starting to roll over, negative divergence, just like we had in place back here with that 7+% drop. Same there, Virgin High just extended at that point, at least on the RSI it did there, and that was it again, about another 7% or so drop. And so be looking for something at least along those lines, and quite likely a little bit more. We went a little bit higher, and I think ultimately this is a very likely swing target down here, about 10,337 to about 10,289. We'll call it 10,290. And then to zoom back down a little closer, it's that same trend line right there, and there's that back test. And so that formed at the smaller wedge, and this is where I left it Friday, sell signals to come here on a breakdown there. So we got that today. We broke down. It was impulsive. That's what you want to see. We had a little flagging type action, broke down. They're pretty much to the length of the flagpole, and a little kickback rally to resistance. So that's, let me give you the line right now. This looks like resistance right here. So the only thing is ES, these are the NQs, the NASDAQ 100 futures. It's about 11,150 or so is minor resistance right there that ideally we should stay below, but it's all going to boil down to what ES does. I'm going to get to ES in a second. Right there, that these are the same levels that were in place last week. So you could see you had a breakdown there. It was an objective short entry. You hit your first and second targets. If you're an active trader, that was good for a move of about, what does that say, about 2 point, no, about 3, right about 3%. So that was good for about a 3% quick pullback trade on NQ so far, and again, quite possibly much more. You know, what we need is, or certainly help to see a move down to these additional targets here would be ES to come in and join. And I'm going to zoom in a little bit here. This is the setup from last week. I'm going to go down to a 1-month time frame on the 60-minute candle here. And all right, so this is the same setup from last week, same trend lines right here. We had a little whipsaw today. It was impulsive, it was pretty solid, but we went right back and we back tested. So actually the breakdown's still intact. We did not regain that trend line. There's an impulsive breakdown, a back test. So if the technicals play out, as I would suspect with these divergences in place and everything, they continue to build since last week. We probably see the move down either later today, maybe in the last hour of trading, and or tonight. And we need to take out that 33.25-ish level. That's the next support, and that would open the door down here to the next target, about 32.82. So breakdown, back test, objective short entry. And if this goes, that will certainly increase the odds that NQ will, first of all, that ES will continue down to this next target, and also that NQ will continue to move lower to those additional targets that I gave you there. And, potentially move all the way down here to about 31.75, 31.90. That's the support zone on ES. To keep the video, not going too long, I'm going to just stop here on the futures. I know a lot of you don't trade futures, but I did post charts last week with comparable targets and levels to watch on QQQ and I believe SPY, but if not, I'll follow up on those soon. Maybe add them under this post in the comments section. All right, moving on to the good stuff. Let's before we get to the ag commodity, let's just dive straight into the trade ideas on the ag input stocks. Remember, you have your commodities, and we have ETFs and ETNs that track those commodities, and then you have individual stocks in this sector. It's called agricultural inputs, a lot of fertilizer companies, things such as that. And this is one of my favorites. I'm going to start here with MBII. It's just had a beautiful downtrend line. We've traded this one on and off many times over the years. You can go in to look at past charts or videos on this one. Below this post, you'll see it says symbol tags or something along those lines, and you click on MBII. It's a link. It's right next to the date under the post on the homepage, and that'll pull up all posts on MBII. So this one, we were waiting for a breakout of the downtrend line. Boom, we got it. We got it on Friday, and so follow through today so far. So we're up about this one's rallied about 25% since that breakout on Friday, and that's what you want to see, guys. This is a what I call an impulsive breakout. I mean, very big green candle. It was on high volume. You can see, I don't know if you can make it out here, but my volume bars, these are both last 2 days dwarf the recent volume over here. So it's check marks across the board, and so far so good. And you might say, oh, darn, I missed that one. It was up 25% so far. Well, keep in mind, when this stock runs, it can really run. It's a low price stock, high risk. There's a 200% rally in just 1 month. So in 4 weeks, 200% gains. Back here off that low, rallied about 390%. So, risk reward goes hand in hand. This thing can fall hard too. So don't get married to it. Don't fall in love. But as of now, constructive chart. And it hasn't hit my 152 target yet, but we gapped above. We took out all that the blue lines were all the additional nearby resistance zones. So this is smooth sailing right now. Nothing's guaranteed, so you don't fall in love with it. But we also took out the 138 target today, gapped above it, and 152 is the next target, then 182. And if we continue to get traction, I might look for some additional targets here. Let me just go over the rest real quick. These are all the ones that I highlighted recently. YTEN has not popped yet. It needs to pop the downtrend line right here, and really the $7 level. That's the one to trigger a nice rally up to at least 1090 or so. So that one's still a trade setup, not an actionable trade. It is on support right now. And again, birds of a feather flock together. So the more of these you see pop, the more likely the rest are to pop, meaning to break out. CGA has not popped yet. There's your blue downtrend line plus 309 price resistance intersecting, so it needs to take that out. Play it safe, say 310, and obviously look for above average volume. Daily close, all the better. But sometimes when these things break out, if you're waiting for a daily close, the downside to that is that the stock could be up 25, 30, 40% by the end of the day, and you might not want to chase it. So there's no easy answer there. These are fast movers. Personally, I like to take the breakout. If the breakout fails, I'll just pull the plug on it and wait again, because you can see sometimes you pop the trend line intraday and then fall back below. But again, sometimes you break out like MBII and you don't look back. Seed, this one was when I first started highlighting the sector a couple months ago. It was highlighted right here as an objective entry on this breakout above the downtrend line. I already highlighted this one recently as having come full circle, hit and exceeding my maximum target. Good for about a 273% rally in just a couple months. But then I mentioned divergent high, and if it broke the trend line, which it did, that's a sell signal, and it's pulled back. So now it's pulled back to, it overshot this 1081 support level a little bit. Still at the divergent high. Look, it could have another thrust up, especially if the sector continues to move up. Because remember, a lot of these charts, I'm talking about the daily charts, but I just now toggled over to a weekly chart. The weekly chart's constructive. And when you get these divergent lows, even though this one's been in a bear market, this was a divergent low back here. You had positive divergence right there. The gains on this one, even if they're just bear market rallies, 790%. From this divergent low, rallied 202%. From this divergent low, it rallied 202%. So far, it's rallied about 384. Yeah, a little more than these last two, but less than that one right there. So that's seed. Again, maybe some long-term potential. I'd prefer to see it come back here to 777. but it may not do that. It could, and the run could also be over with that run. But again, what I'm getting at is I'm watching the whole sector. And I want to see continued bullish developments in the sector, and then this one might be worth jumping back into. RKDA not yet triggered, needs to pop the downtrend line, and 393, we'll call it $4. This one runs too. Traded this one many times in the past. You can find that on the site using the symbol tag or the search function. And you know, here was a run, and I believe I pointed this one out. That was a 1500, and I mean in advance. That was a 1400, almost 1500% run right there. Here was a run. This one I don't believe I caught or pointed out, but that was still about a 470% run. So again, it's low price, but it can really run when it goes, especially when the sector has traction. That's why I keep highlighting these stocks. UAN still needs to pop 111, hasn't done so yet, so that's still a trade setup. IPI, I said needed to break out. There's a breakout point 97. It did that, took that out today, and up to the high so far it rallied about 23%. So again, you know, Apple's doing its thing, Microsoft, all those guys. I'm not comfortable there. Those aren't my type of setups. These are the stocks I'm comfortable with. So this is where, and you know, and in a day you can make what those stocks, you know, can do in a month. And hey, you know, I'll take 20-something% in a month. But again, these are the high flyers, and these guys really pop. So brief momentum fueled overshoot of my first target at 113. If it comes back to anywhere, you know, to 97 or even close to it, $1.03 somewhere, that would be an objective entry as well. We might have a downtrend line to watch. Yeah, let's do that too. Let's say here's a downtrend line. So as far as either if you're long and you're looking for a stop, well, number one, it should hold the 97 breakout level, at least on the daily close. Sometimes I'll run in to clear the stops and slightly take it under there and run back above. So it's up to you. The downside to using a stop on a daily close is this thing could keep going. So it's a little bit tricky. You just have to kind of read the stock, see what's going on in the sector, and make a decision. Hey, are all the breakouts that happened recently failing? If so, let's pull the plug, get out, because sometimes you get these little false starts, if you will. Otherwise, be looking to either add to that one on, you know, pull back to $1 with a stop somewhat below this uptrend line. We have 3 reactions. I think it's worth it. Again, that'd be your max stop. It should not take that trend line out, or it won't look good. Now let's look at the upside. Next target would be the downtrend line, then 145, and then 209. If 209 gets taken out, 253. So if this guy starts flying, this would be my max target at this point in time. I'll turn that level up a little bit so you can see it. I need to lay these out in advance because, again, that's why I do these videos. I do them before the stocks break out. You can see a lot of them broke out today and ripped. I moved my office over the weekend, so I spent most of the day configuring the new office, setting up my monitors, added a new monitor to the system, and oh, the amount of work on resizing the charts and figuring everything out, it's been a lot. So that's why I'm getting this update out to you a little later than usual today. All right, next one up, and then we'll move on. MBII I already covered. AVD, that one also broke out. The blue downtrend line right here was your breakout point. We went up. We effectively hit my 1553 target. Remember, these are unofficial targets, so you want to sell just shy. You know, that's the best thing in case the sellers step in early, and that's good for about a 13% gain so far since the breakout last week. That one actually hit on Friday. MOS Mosaic broke out today, so here's a live one right here. Train hasn't completely left the station yet. Broke out above both the blue downtrend line and that 1789 level I had last week. Volume looks really nice today too. So check. And again, that's why I'm doing the updates. Seeing, you know, momentum in the sector. Whereas a couple weeks back, I was highlighting bullish developments, potentially bullish charts. Now I'm highlighting actionable trades. Trades are actually breaking out and have triggered objective long entries. So targets 2220 and then 2548 as of now. Maybe more. We'll see if we can get some traction here. CF also took out the 3112 level, and it's coming up to the next target, which is also the next objective buy point. If it can take out 3514, that opens the door to 3891, 4421. Let's just hold for that right now. Let's just say that's my, well, again, it depends on how it looks. If and when it starts to approach that level, how does everything else look? Then I'll make the determination whether to, you know, hold out for that 5427 area or not. And that's it. Those are the ones I had flagged. Those are the ones I highlighted recently. Ag commodities are taking, some of them are taking a breather today, and this is what I wanted to point out, and then we'll wrap the video up. Cotton broke down. There was that price channel I've been highlighting recently. Breakdown, back test, and impulsive move down below there. After also a divergent high. This is negative divergence right here. When we made that marginal new high, you can see the divergence down there on the indicators. So, you know, if it pulls back, this would be an objective long entry or re-entry, or add back at about 34.80 or so. Other than that, it stopped just shy of my target here, first target or next target, 39.26, and still, the overall, the longer term and even intermediate term outlook of most of these ag commodities still bullish in my opinion. Short term, we've had some nice runs in a lot of these, some quick gains, and some of them need to take a breather because they're overbought. Plus the charts are also saying, hey, divergences, trendline breaks, things like that. So I'm kind of giving you a little heads up there. And sugar is one of those. Sugar broke out. The last buy signal was right here on the breakout above the downtrend line. Hit that 40.47 target last week, but it just put in divergent. Well, actually, I highlighted this last week. It had divergence, still has it, negative divergence. We don't have it confirmed yet, but if we go any lower, the PPO will make a bearish crossover, meaning this orange line will come down, cross the white line. That'll effectively give us the lower high in the PPO, giving us the divergence. Same thing in the RSI. You can see we are the divergence growing in the RSI. So that's that. Probably fit a downtrend line right now. Pullback targets. I'd say if it comes back in, in other words, if you're in this as a long-term position, don't worry. Short term, I'm a little bit cautious right now. Maybe a little near-term bearish. Might get some pullbacks. Sometimes you get these bearish developments, divergences, overbought conditions when a sector is rallying, and it just shrugs them off and it continues to go up. So what I'm trying to say is I'm not as so keen to short these right now. More so just saying, hey, if you've missed this trade or you've been wanting to get in this trade, some of these you might want to hold off and wait for a pullback, or wait for some of these divergences or overbought conditions to clear out. That can come in the form of consolidation, a pullback, or anything like that. So there's sugar. Next one is cane, which is the other sugar ETN. Broke above the downtrend line. This consolidation recently started to run. Hit the 200-day moving average. I don't know if that's what's checked it right here. And also, like SGG, the other sugar ETN, it also has negative divergence. That's something to note right there. And we could probably put a downtrend or an uptrend line as well to watch. That 649 was on this old trade back here. That was a stop level, but it's also a target. I think we've traded around that. It's not a hard target, more of a soft target. Let me give you another one here. Right about there. 626 be the next resistance level. Cow starting to move today, maybe because the grains are pulling back. I'm going to get to the grains in a second. That's a net benefit for livestock when grain prices go down, cheaper to feed them. 230 up 2.5% today, 2.3% today. Like I said, I'm not screamingly bullish on it, but the chart looks pretty decent. And again, we're seeing just broad-based movement in the last couple months in all these. They've been moving up, potential bottoming plays. So UNG is natural gas, hit that 1310 target. This was on the daily chart. I gave you some targets there. I gave you 60-minute targets recently. We hit that maximum target. I had a target zone of max near-term target zone of 1221 to 1248. Remember, the natural gas chart longer term is bullish. I like the longer term outlook very much. Near term, we got ahead of ourselves. We put in some negative divergence, and we hit my final target. Last objective long entry on it was a breakout right here. Right there, if I can box it in above the that wedge, I believe that was it. And we also looked at natural gas futures. That was really our cue to get in, and that was NG. Where's my NG? I've got it somewhere here. Boom, there it is. All right, that was NG. NG's come full circle. Broke out right here. had a little whipsaw there, as I mentioned, but it did hold on to that 1787 support. And at this point, it looks like, at least in the near term, it's run its course, because we put in that negative divergence right there, just like we had the divergence right there I was warning about at the time. It did play out for that correction there, pushed up, made another leg up, but this negative divergence is now played out for a pullback, which I will say that's an objective area to cover a short. Remember, we took out this trend line today, hit that 119 former resistance or price target, now support. So we're at support. If you shorted that trend line break or anywhere on the divergent high, great time to cover. Or I can say it's an objective time to recycle, and there may be more to come. I'm not overly confident that this is going to be it for natural gas, but I'm leaning that way because the longer term charts are constructive. So that may be all we get as far as a pullback. And it was a decent pullback too. It was a drop of about 6.5% or so. Soybeans also taking a breather. Again, a lot of these, were because these ETNs or the futures put in these divergent highs, pulled back to trendline supports. I can say this, longer term, I still think this chart's constructive. I can say this is an objective long entry, or if you're already long, you want a relatively tight stop somewhere under there. If not, you have a reaction low here, and of course you have these lows over here. But I favor this. I'm still looking for a move up to this trend line here at least, and then longer term, I expect that trend line to be taken out, providing a longer term buy signal. And I'm talking about this trend line right here, comes off the high back in early 2018. There's a downtrend line, and so this is what I'm favoring. And then ultimately a break of that, and a lot more upside in soybeans. JJGs come back in, back testing the trend line, offering an objective long entry or re-entry if you already took it. That tracks corn, soybeans, and wheat all in one. And like I said, we've seen some weakness just lately. After a nice run up, we put in the divergent low. We had a thrust up. We hit my first and second targets, 4160, and as usual, you hit a target on the initial tag, you're going to get a reaction. That's a reaction. After a divergent low, I can say this: I don't think this move right here from there to there is commensurate with these divergences. I think a divergent low like that calls for a much bigger run than that. We had a divergent low there. You can see that rally there. We had a divergent low there, a breakout, and a rally that was larger than that. So we had a divergent low here too. They're not all marked on the chart, but this is what I look for: positive divergence. That one didn't really pan out much, but it did. What happened is you moved up, and we're in a downtrend, and you corrected here for a while in time. You did have a rally. Don't get me wrong. The divergence did play out. It just didn't play out for that much of a rally. This was a much bigger rally. This was a bigger rally, and I'm still leaning towards a bigger rally here. And part of that JJG is made up of wheat. Wheat hit almost to the button. Its official trade hit T2 550, pulled back. Again, that's the story of a lot of these, is that the pullbacks are priced in. The technicals are working. The divergence has played out so far, just like it did back here and back here, and nothing goes straight up forever. Sometimes you do have a strong unidirectional rally, and then other times you kind of zigzag your way up after breakout like this. We're zigzagging, a little correction there, zigzag, 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 and that's what I'm viewing this as. And if I'm wrong, though, that's what stops are for. So we have stop still at on daily close below 490. It should hold that level. This is where we've stepped in and bought last several times. That's, I think, where we entered our last official trade, this current one. And again, we should hold above that level. If they go at it, if they get anywhere close, my guess is I'll probably punch down, clear the stops, and then reverse it. So you might want to give it a little more room. That's up to you whether you want to hold, relatively tight stop or give it a little more. It all depends on your entry price too. If you bought right here, right shortly before or after it hit T2, well, you probably don't want to give it that much rope. If you bought it down here, then you can certainly afford to give it more rope. And especially if you already took profits at T2 and you're recycling back in, then you could give it a little more rope. Corn still has yet to wake up. One of the few ag commodities not moving, but also one of my favorites because risk reward profile, especially if we can get a turnaround in the other grains. I want to see wheat, obviously, and soybeans. I want to see those guys, start turn around and put the next leg up. And if so, I think there's more upside potential compared to downside loss. Corn could go lower. If it does, and it go lower anytime soon, it's simply going to extend the divergences that have already been building and are still in place. But there's your targets there. Corn needs to take out 1244 plus the downtrend line, so you can either go long, buy here at support, or on a breakout, or I should say, because you could take a partial position here, wait, add on a break above 1244 in the downtrend line, and then target any of these targets up here. And Joe, as I believe I mentioned last week, nothing goes up straight up forever. It had an uptrend line that had been walking up, a pretty steep uptrend line, and PPO was rolling over, and it did. It's poised to make a crossover. So we took out the trend line. And this is after hitting the second target, coming pretty darn close to that. Oh, we closed it out here. That was the last official target because I never extended this one beforehand. So either way, we're back down below there. So if you booked full profits at T2, then you're good. If you wrote it up, trailed a stop, you're also good because you should have been stopped out, or a manual stop under that trend line I posted last week. If it comes back here anywhere close to that former T1 level, objective long entry or add-on. Same thing if it gets down here to this resistance level around former resistance, now support around 3162. A couple more and we're done. NIB, cocoa, same story. Last objective long entry was right here on the trend line hit, but it's gone up quite a bit. It's rallied in just a matter of a few weeks here. Rallied about 25%, and it's taken a little breather today, and that's perfectly normal. Could be more. Again, right now, probably let the dust settle, not jump into these right away. Where would I like to see this one as an objective re-entry? 29, a little north of 29 right there would be fine, or that 28.36, anywhere around there. That would be your next objective long entries on it. And finally, last but not least, DBA. This is the one-size-fits-all agricultural commodity ETF actually. Cattle, soybean, sugar, corn, cocoa, wheat, coffee, hogs, feeder cattle, and cotton. And broke out recently, given a buy signal. I've been mentioning it, bottoming right here, had a falling wedge pattern, this basing pattern. So if I extend this out, remember this was the top of the recent trading range. So we had a breakout right here. Let me box it in for you. There was our breakout, follow through right there, and now we're coming in for a near back test. So any back test of there, or even around this level, 1389, 1390, we're at 1396 now, anywhere there, even a little below. And we could probably also put a trend line in here, which I'll do right now, and we'll watch this. This should, doesn't have to, but ideally should contain any pullbacks. We could draw it a few different ways. I'll leave it like that right now. I can maybe pull it down a little lower. And it comes in together. See, the trend line comes in with there. So there's dual support, objective long entry, next target after that, 1467, 1514. And again, I'm looking at this as a potential longer term bottoming play. So ideally you want to see it hold that. If it doesn't hold that, well, there's a chance we'll go down to the midpoint of the range, about 1349. And if that doesn't hold, the bottom of the range, which is down around 1318 or so. And that's it, guys. Let's wrap it up here. So we covered gold, silver, the markets. Need a little more work on the ES to see a reversal off that back test. Gold, silver look like they're ripe, ready to go. Again, a little more work there. I can't remember if I covered this early on when I hit gold, so I know I started with the long term, the weekly charts, but so gold's playing out as expected. We had the sell signals last week. We broke this wedge right here. That was a sell signal in gold, and we came down. I had the secondary trend line right there. We hit it today, and we bounced. So far a week, that's a muted bounce. Not a lot of buyers stepping in. Whatever pop, it looked like they've started to buy it off that trend line. Boom, right back down to it. So I suspect this will break soon. Indicators are flipping down, starting to look bearish. Here's the midpoint line on the PPO, the zero line, and we're below that now. So there's our next objective short entry or sell signal on a break of this trend line. And next target is still 1997, our first target, in fact. 1997, and if that goes 1951, 52-ish, and maybe even all the way back down here to this support zone. And then if I didn't cover, I can't remember, I don't think I did cover the futures. Last one, silver. Silver also, mentioned, gave us a breakdown on Friday, sell signal there. Breakdown, Gold had hit at this point. Gold hit that trend line support, so you got to bounce out of both of them. The gold buyer stepped in, and that caused, also some buying carrying over into silver. But as of now, that sell signal is still intact. We haven't taken it out. Moved above the recent highs. There it is. I'm gonna just fix these divergence lines. So that's it. And what we need to see now is, of course, gold to break that support I just showed you, gold futures, and then silver needs to effectively take out these recent lows, about 27.37, and that will open the door. There's some price support here I need to add to it, right about there, and that comes right in with the trend line. So there's my target, and that's about the next drop, next wave down. If it starts from here, I expect we'll have about another 16% drop. Minimum in silver, and then again quite likely come all the way down here to this larger uptrend line. Okay, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.